the good thing about Tesla and the EV market is we're really in the very early innings. There are only about 2.5 million EVs that were sold. The car market, as I mentioned, is between 80 and 90 million units globally. So EVs, over time could be 20, 30 times bigger than they are today. And so even if Tesla lost share, if you said, look, its share is 22% and it's going to go to 15%, well, that would take 30% off. But if the market is growing 20-fold, Tesla could still be 10 or 15 times bigger, even if it loses share. So that's sort of the beauty of having an end market that's growing explosively is Tesla can have very, very healthy growth while still potentially losing share.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, I'm reacting to comments from Tony Sacconaggi, who happens to have a $180 price target on Tesla stock, yet seems to make some fairly reasonable points about the company. A little bit contradictory, a little bit dichotomous, but hey, he seems to be trapped between the old world, the new world, kind of understanding what's going on, but still looking through the typical valuation metrics at the stock and thinking, what the actual f***? So let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
What do you make of the delivery numbers? I mean, I realized just shy by a couple hundred of that 500,000 that Musk had forecast, but we also did have a pandemic in the middle of this and some key manufacturing shut down too.
Sure. Look, it's a very notable accomplishment to grow units 36%, to ramp new facilities. It's a terrific achievement by Tesla. The question, of course, always is what was in expectations? And I'm a little surprised the stock is as strong as it is today, because I think most people expected Tesla to be able to deliver against this target. And in fact, there was speculation over the last week that they might eclipse that target.
I think many people, Tony included, lots of retail investors and people in the mainstream finance media have mistakenly assumed that Tesla stock's movement when the market opened for the first trading day in 2021 was based on their 2020 deliveries of 500,000 vehicles. Yes, that probably had some impact, but I think the majority of this was actually on the back of rumors that after Tesla reduced the Model Y price in China by 30%, they received over 100,000 orders in half a day.
Yeah, I mean, the stock's trading up about 5% right now, about $742 a share. I'm looking at your note. You've got an underperform rating, $180 price target. What do you think triggers that? What do you think, I guess, brings such an incredible, dramatic sell-off to this stock? I mean, it has been largely Teflon until this point, at least recently.
No, absolutely, Morgan. The stock is up about 80% since it was included in the S&P, or since it was announced that it was going to be included in the S&P. And quite frankly, estimates haven't changed at all, nor have the company really announced anything material. So the stock is really, appreciating, we believe, largely on momentum. Now, what reverses that? It's very difficult to call. If there's a rotation in the broader marketplace towards value-oriented stocks, that could undermine Tesla and other growth stocks. I think most importantly, if Tesla's not able to deliver against expectations, you'd likely see a material pullback in the stock. And I think expectations are for close to 1 million units in 2021.
Tony, where are you getting your numbers from, my man? I mean, this is positive and I actually agree. However, the consensus opinion at this point in time, the Wall Street analyst consensus, around 700,000 or so vehicles delivered for the full year 2020. Many of the YouTubers and folks on Twitter are closer to 1 million units, this guy included. Time will tell, but I think that Tesla is going to guide around 850,000 units when they announce their full year 2020 results in a few weeks' time, not even close to 1 million. I think that they'll underestimate, just to factor in a little bit of uncertainty, ramping up 2 new facilities in Berlin and Austin, while continuing to expand capacity in Shanghai and Fremont.
The company will, in all likelihood, on its earnings call at the end of the month, set its target for the year, and we'll see how that stacks up. But those are really probably the most material things: a disappointment in relative to expectations, or a broader market rotation away from higher flying growth stocks.
So Tony here is suggesting that in order for Tesla stock to reach his $180 price target, there'd need to be some serious disappointment in terms of market expectations versus Tesla's actual execution, and or an enormous rotation out of growth stocks into the old world, aka people throwing their money down the toilet, because that's not going to produce the same kind of returns it did over the last 50 years, just saying.
Tony, I can remember the mid to late 90s when there were analysts who would look at Amazon, and justifiably so, and question its multiple, which was infinite because it wasn't actually even earning money, and its business model. But they didn't kind of get it, obviously, as to what it would become.
Interesting point here from David. Many people misunderstood Amazon stock, and hey, it wasn't just in the 90s. I mean, shout out to my favorite Tesla stock short seller, Mark Broke/Braindead Spiegel. I'm not sure what the B in the middle initial there stands for. Please somebody let me know in the comments below. And it's nothing personal with Mark. I've never met the guy. I'm sure he's a lovely gentleman in person. But I can hold Mark Spiegel up as an example of somebody that is just dead fucking wrong and does not understand growth companies. A moment ago, David was giving the example that many people didn't quite understand Amazon stock in the 90s. Well, how about Mark Spiegel in 2015 tweeting that he was just about to short Amazon stock when the stock was in the $300 range? It's now in the $3,000 range. And did Mark learn his lesson shorting Amazon stock? Apparently not. Famously short Tesla stock, bleeding money left, right and center, quarter after quarter, year after year, famously wrong, yet still can't let go of this idea that Tesla is a fraud. And to round out this trifecta of colossally embarrassing shorts, Mark Spiegel has just announced that his fund, Standstill Capital, I think I'm pronouncing the name correctly there, has now initiated a short position in the ARK K fund. Yep, that's right. The guy's literally shorting disruption and innovation. Not only that, but I'll put this on the record. The ARK ETF is going to be one of the top performing ETFs in the year 2021. And this guy's just shorted the whole thing. I mean, really, does this guy have a humiliation fetish or what? I mean, you really do have to admire Mark's conviction, but perhaps not his judgment. Don't take my word for it though. Look at the numbers. Since inception on June 1st, 2011, the fund is up a whopping 36.1%. While the S&P is up 240% and the Russell 2000 is up 166%. These are not typos. A whopping 36% over almost 1 decade. I'm sure all of the investors, and there's many of them, I think Mark manages almost as much money as I have in my own personal portfolio in his fund Standstill Capital. I'm sure all of these millions of investors will be very satisfied with the returns Mark has produced with his intelligent investment decision making and great shorts. Wait, how did I get off on this tangent again? Oh, that's right. I was trying to explain that there are some people out there that just do not understand growth stocks, do not understand disruption, do not understand innovation. Don't be one of those people. Unless, of course, you'd like to feature in a future episode of Solving the Money Problem, in which I ever so delicately and gently point out some of your investment decisions and why I don't think they were very wise. In fact, just out of the goodness of my heart, here's a few tips that I think will serve most investors well. Don't bet against innovation. Don't bet against disruption. And definitely don't bet against Elon. And by the way, if you haven't already got your Don't Bet Against Elon t-shirt, check out the link in the description to the merch store.
And I just wonder, is that sort of what the case may be here with Tesla? You can do all the discounted cash flow models you want based on how many automobiles they'll sell in 2030. But what if they're the leader in autonomous driving? What if they're the leader in battery technology? What if they're the leader in just some sort of new effort towards efficiency overall? Is that not being taken account of by you?
What a difference a year or so can make. Can you imagine? It would have been unfathomable 12, 18 months ago to hear somebody in the mainstream finance media on a network like CNBC asking questions about Tesla's autonomous software and how important that can be to the business, the company, their valuation, and therefore the stock price. All those same questions about Tesla's battery technology. It's been really fascinating to watch the enormous and predictable sentiment shift on Tesla stock and the expansion of people's understanding of what the company is and what the future looks like OG subscribers and viewers of this channel will recall me predicting exactly this: the change in sentiment, the change in narrative in the mainstream finance media, the change in perceptions from retail investors and stock analysts on Tesla. And we've seen this happen. Some people, I suggested, will just need to see even more evidence of what was obvious to others a little bit earlier. For example, Tesla's improving margins, therefore improving profitability and or ability to cut prices, therefore expand their market. Very obvious years ago, yet many analysts, many people in the retail finance community and on the mainstream media hadn't even looked at the company that closely. They didn't get it. Headlines, they're losing money. Okay, I'm not going to look any closer. I hate this company. There was other people that saw Tesla's literally given presentations like their Autonomy Day presentation, explaining their plan, explaining the technology, which could have given all the clues about the autonomous software. You put two and two together, you realize all their vehicles have sensors, they're collecting data, training AI. Like, all of this information was available a number of years ago. Yet in the last 12 or so months, we've really seen this sentiment and this narrative change. I wonder what could possibly have caused this shift in sentiment. Let me know in the comments below. What are some of the reasons that you think might have contributed to the huge sentiment shift, the narrative shift around Tesla stock in the past 12 to 18 months? I mean, the consensus opinion has completely swung from Tesla can't make a profit, they're going bankrupt, don't buy Tesla stock, short Tesla, Tesla's the worst company ever, to holy crap, they've won the decade plus, the software margin is going to be enormous, autonomy, holy crap, what about battery technology, oh my god, they might even license that, holy crap, they're growing really fast, YOLO Tesla stock. So leave your thoughts below. What do you think are some of the factors that have contributed to this widespread, almost universal shift in sentiment and perception around both Tesla the company and Tesla stock in the past 12 or so months?
Look, I think that's what you have to believe to justify the current valuation or see further upside is, as a pure car company, it's extremely difficult to justify the valuation. As a wildly profitable car company, it's still very difficult to justify the valuation. So you have to believe that they're successful in creating additional businesses or additional accretion to their business model. So you cited some of those, David, that they are the leader in autonomous, and maybe they uniquely have that technology. They can either charge an enormous premium for that, or they can license that technology to other people. That's certainly one possibility. Same thing on battery technology. Does Tesla come up with a really unique battery that it is able to license to others in the industry?
Respect to Tony here. I mean, he actually does know what needs to happen for Tesla's stock price to make sense, so to speak. This is good. He's not a deluded Tesla short seller or shill. This is somebody that's saying what needs to occur. These are reasonable points. Tony's saying the right stuff. I guess at the end of the day, it just boils down to he's very skeptical as to whether or not Tesla can become these things and do these things, whereas somebody on my perspective is like, dude, it's so fucking obvious they've done it that I'm going to talk in hyperbole for 5 years so I can clip these videos for the next half decade of me being right years ahead. Did I just give away my master plan for the channel again?
But one has to believe these kinds of things because Tesla's valuation today is basically pretty close to the entire automotive industry. And so at $700 billion for a company making 500,000 cars versus the entire automotive industry that's making about 80 million cars, you have to believe that there's going to be something extraordinary about Tesla.
He's absolutely spot on. What Tesla has done, but more importantly, what Tesla will do is extraordinary. That's exactly the point. I mean, that's literally why I'm all in on Tesla stock and have been for the last 5 years.
Beyond just simply a pretty big and pretty profitable automotive company.
Yeah, I mean, Tony, I don't know. I'm still a little skeptical about this $180 price target. I mean, just seeing what happened to shorts in the stock last year and the fact that I think if you were betting against this stock, you've lost money or at least not made money if you didn't invest in it. That being said, I do also realize competition is another key piece of the story here. What we're seeing take place in China, I realize you're starting to have the company deliver its own cars from its location in China. But the fact that you do see other EV makers that are homegrown there and more focused by the Chinese government on, I guess, propping up those companies, if you will, how big of a risk is that?
Well, they say a picture is worth 1,000 words, so I guess the graphic on screen will save me a little bit of talking. Rip everybody who's just listening to this video.
Well, there's certainly some risk there, but you know the good thing about Tesla and the EV market is we're really in the very early innings. There are only about 2.5 million EVs that were sold. The car market, as I mentioned, is between 80 and 90 million units globally. So EVs, you know, over time could be 20, 30 times bigger than they are today. And so even if Tesla lost share, if you said, look, its share is 22% and it's going to go to 15%, well, that would take 30% off. But if the market is growing 20-fold, Tesla could still be 10 or 15 times bigger, even if it loses share. So that's sort of the beauty of having an end market that's growing explosively is Tesla can have very, very healthy growth while still potentially losing share.
Once again, great point here from Tony. I've mentioned this myself many times. The EV market is going to go from effectively a couple of % of the total new vehicle market today to all of the new vehicle market in the span of around a decade, give or take. This means that the whole EV market itself is going to explode from a few million vehicles per year to tens and tens and tens of millions of vehicles per year. So it doesn't actually matter what percentage of a certain market any EV maker has, period. The only thing that matters, literally the only thing that matters in terms of their automotive business is how many vehicles they're selling on planet Earth, because the whole market's going to be expanding.
Now, again, it's all about expectations. There's a lot built into the stock. So if Tesla did start losing share, or the Chinese government put in place certain incentives that were unique to Chinese OEMs or consumers to buy Chinese OEM product, that would certainly be a risk to Tesla's ability to grow it, at the rates that are currently being modeled.
To sum this one up, Tony seems to know what needs to happen. He just doesn't believe it will. Interesting. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. PS, if you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.